This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report podcast highlights for the week of Monday, June the 20th, 2022. A week that began with a U.S. market holiday. All U.S. markets were closed on Monday, June the 20th. So instead of a daily podcast, we had one of our special podcasts that day where we talked to a mining company CEO. This time it was Alistair Still, who's the CEO of Gold Mining Inc. Very interesting company that has come way down in price like so many others over the last 12 months, but particularly the last 2 months. Is it a bargain at these levels? Is this something where you pick up some shares on sale? Well, that was one of the things we discussed with Alistair. Here's just a small part of what we discussed that day. You've got, what'd you say, almost 21 million shares of Gold Royalty, and that thing's trading at, 240 or 250 US, but it's been a lot higher than that, but it's just been washed back like everything else. So it's like, what, $60 million?
Close to 60 million. And then if you add in the further 10 million plus or minus in our last quarterly statement in cash we have on hand, and then you look at our total market cap and you take that off. So that really leaves you what we call our enterprise value, market cap less your assets.
Yeah.
You think that enterprise value divided by 32 million gold equivalent ounces gives you an unheard of value of something like, $3-4 per ounce. And you think, well, what does that mean? Well, I would challenge that with any of our peers or any of our similar sized companies or even much bigger companies. And these are companies with similar assets, sometimes singular assets, which carry a greater risk because they don't have the diversity. And sometimes in more challenging environments, they can trade at $20, $30, $40, $50 per resource ounce. So there's a gap there. And I think that gap is what really we're trying to bridge. And once the gap starts to be bridged, there's a significant return there, from $3-4 per ounce up to $30, $40, $50 per ounce. That's a significant gain. And that's what we see as our target. That's what we see as the opportunity.
With the U.S. markets back open on Tuesday the 21st, our attention turned back to the precious metals, specifically gold. Daily chart looks like a series of higher lows as it kind of churns its way through all this Fed nonsense. But there is some stiff resistance overhead that we have to get through before we can get excited about any upside. And that's all there on the daily chart, and that's one of the charts we discussed Tuesday the 21st. Gold on the daily chart, it's pretty clear what needs to happen here. We're back under now for the second day in a row, back under the 200-day moving average. You can see how pivotal that level has been for the last month. You get above it, try to use it as support, get below it, it becomes resistance. And it was resistance again today. 1849 is where you'll find that. And again, today's high 1846. Now, I tried to demonstrate for you how we've had this series of higher lows, right? Marginally, slightly higher lows. So again, we've been talking about that as at least a positive underlying trend. There's still also a potential bottom here that we talked about all last week. But there's no level of excitement. We're not sharply oversold either in terms of the RSI at 44. So we'll just wait to see what happens here. As we run out the clock over the next 2 weeks, even just going sideways is going to send us to a date with that downtrend line that goes back to the highs of March the 7th. To get anything going positive, we got to get above 1880 and that downtrend line, which intersect by about, Monday or Tuesday of next week. So we'll see. But for now, there's nothing on that chart to suggest a blast higher, but there's also not much to suggest a plunge lower either. Speaking of plunging lower, oh my gosh, it was just 3 weeks ago that we were looking at copper, noticing that it was above its 200-day moving average and thinking maybe it could lead the precious metals out of the abyss. And instead, copper has turned and plunged back under $4 a pound. They don't call it Dr. Copper for nothing. This probably is telling you where the global economy is heading. And again, this was something we discussed Wednesday, June the 22nd. So here's copper, as I was telling you. This is crazy. Look at that copper RSI is down under 30. Just plunging. Now, the good news on copper is that's actually if it stops here, it would be one of those positively divergent lower lows. Now, I'm just not saying it's going to stop here. The RSI is down to just under 30. Back there in mid-May, it was like 26, 25. But this is gnarly. I mean, just coming straight down with silver from April into May, rallying, briefly looking like there was hope 3 weeks ago, getting above the 200-day, and then whammo, straight back down. Dr. Copper does not look good for the global economy if you use that as an indicator. On Thursday, June the 23rd, we took another look at gold, this time on the very short term, 15-minute candlestick chart that details all of the trading so far this week, Tuesday, Wednesday, and Thursday. And look what we noticed. All 3 days, price took a stab up at the 200-day moving average for the front month, August 22 contract. That thing's up there just below 1850. All 3 days on heavy volume, price shot up to that level. And then all 3 days on light volume, it was immediately capped and ground backward. Just gives you some idea of the overhead that we have to fight to get through before we can start feeling better about price and the direction of price. Again, just something we discussed Thursday the 23rd. All right, here's what I'm talking about. You can, when I mentioned gold getting chewed up on light volume, and that's what we'll have to watch for tomorrow as well. Remember, only 3 days in this trading week, Tuesday, Wednesday, and then today because the holiday back on Monday. Well, here's all 3 of them. And in all 3 of these days, surge of COMEX buying early in the session. Okay, these are central time zones, in the 6 to 8 o'clock range. Okay. Look at the big green bars of volume, right? Okay, and then what happened? All 3 times. Now, Tuesday we only got within about $3 or $4 of the 200-day, but then just washed backward. And look at how light the volume is. These are just algos just chewing on the bid, dropping price, occasionally hitting air pockets, and you get the big red candles. You get to 4 a.m. Yesterday morning, zoom right back up, banging up against that 200-day moving average. Biggest volume of the day, and then grinding down, occasionally getting air pockets, light volume. Again, all the way down to the same 1825 level. 6, 7 o'clock, 8 o'clock this morning, boom, another huge rally, biggest volume of the week on those flash PMIs. And then volume just washes away and price grinding again, all the way down to this 1825 level. Okay, so again, we'll see if we get the spike tomorrow off of anything. But we may very well still get the grind, and we'll see just how it all turns out. And on Friday, June 24th, the COMEX metals looking to wrap up another kind of dreary week. Not much exciting going on there. In fact, they're actually drifting lower as the Fed still continues this charade of higher interest rates and pretending that there's not a recession that has already begun. So for today, as we wrap up your podcast highlights, let's instead go back to something that we discussed at TF Metals Report on Wednesday. Something that's not really getting much notice yet, and that is a rising TED spread. That is the difference between what used to be euro dollars and T-bills. Now it's LIBOR and T-bills. Anytime that gets above 50 basis points, it's generally thought of as an indicator of counterparty risk. And the issues that come with that. Well, is that the case now? As the TED spread is the highest it's been since 2008, right at the end of the great financial crisis. At the same time, we're seeing some of the credit default swaps. Remember those? Credit default swaps and some of the European banks are soaring. For example, Credit Suisse, 5-year credit default swaps, highest levels again seen since the great financial crisis. Is there a problem brewing under the hood? Well, we'll know more about that in the weeks to come, that's for sure. And that'll be something we'll be keeping an eye on at TF Metals Report. So please join us. It's more than just the precious metals at TF Metals Report. It's an online community that you should be a part of at such a perilous time. Please check us out at tfmetalsreport.com. Click the subscribe button and you'll learn it's very easy to join, very inexpensive as well. Thanks again for listening to the TF Metals Report podcast highlights. We'll do this again next week.